Welcome guys, welcome to the trading shadows. I'm Abdullah FX. Here we trade in shadows because we are destined to trade. We are going to discuss or to learn about simple moving average strategy, especially for beginners. Okay, this is a simple, not simple. Okay, this is simple trading, simple moving average strategy, especially for beginners. Okay, what is a moving average? A moving average is an indicator which takes the average or the price of the last moved candles and make an average move, and that's what it interpret and put on the chart. What does it means? The moving average, for example, 50 moving average, it takes the average of 50 last candles and it calculates the average or the mean of the price and is what it interpret on the screen or on the chart, on the graph. 10-minute 10 moving average or an indicator with a period of 10, it takes the price of 10 candlesticks, 10 last candlesticks, and it interprets their move, whether it's in uptrend or a downtrend. If 50 candles are in a bullish, that's what the 50 moving average indicates on the chart. It means that the moving average, it shows or it tells the previous informations if they have been in an uptrend, so that we can expect that we are going to keep moving in an uptrend. Let's go to the chart and see what I mean to say. Okay, let us remove, let us go on the candles. Okay, let us try okay, let's go in H4. Okay, it can depends on your structure, but me here I'm in H4. Okay, let us, this is a necked chart without support or resistance. Okay, what we do, we click here on this icon where we see indicators. Okay, we write in the moving average. Okay, we click here on moving average exponential. Okay, and it comes here, and then we go here to the setting. You see here, if we click here, we hide this moving average, and if we click here, it appears or it appears. Okay, if you click on the eye once, it's hidden, and once you click back there, it comes back. Okay, so here we have, if we click on remove, it automatically deleted. Okay, so this move, and if you click here on settings, it's where we click here on settings. Okay, you see here on length. Okay, we are on the inputs length. Okay, length, it's like how many candlesticks you want to do. So we use 50 moving average, 50 candlesticks. Here in inputs we use 50. Okay, we click here to enter, and then we return back here on the style. It's where we choose the kind of color we need to use. Okay, for me, I like to use the moving average in the color of black. Okay, here you click on the black, and you come back down here, you see the thickness. Okay, thickness is how the moving average will appear on the graph. If it will be thin, okay, if it will be thinner, for me, I like to use on this third. Okay, this third. Okay, you click here, automatically the moving average is what is put on the diagram. Okay, so what the next thing we will do here, we return back to the moving average here. Okay, indicators, we again moving average, okay, average. Okay, here it's exponential. You click back there. Okay, here you return back to the to the settings. You start with settings. Here we use 20 inputs. Okay, 20 inputs. Style, it's better to change the color. It's better to change the color. For me, I like to the different colors of blue, and then I go to the third thickness, and then I click. Okay, so if you can see here, all the on my entire chart is automatically installed with the moving average. Okay, how does this moving average works? Okay, this moving average works if and only if the market is trending. Okay, if and only if the market is trending either in uptrend or in a downtrend, not in a range or a consolidation, in a consolidation structure. Okay, so you go to your chart and you see always where those two moving averages closed with each other. If they closed each other, okay, look, if this blue moving average is called the fast moving average, and this black of 50 EMA is called slow moving average. If this slow moving average closed upward, closed in black moving average upward, and the candlestick closed in upward, we immediately enter for buy. Okay, we immediately enter for buy. For example, here you see the moving average closed upward, we enter for buy. We put stop loss below here, and then we target our risk to reward of 3. Okay, this is the first trade. Here I can repeat back. I said that if the moving average, the blue one, managed to close upward, okay, upward, we look for buy. The opposite happens if it managed to close downwards. That's where we look for sell. Okay, here also, here there is no crossover. Okay, cool. Again here, if you can see, the price or the moving average or fast moving average managed to close upward, and the candlestick closed above the moving average. Okay, managed to close above the moving average here, so that we put our stop loss below here, and then we target our risk to reward of 3 or 4. Okay, let's see here. Okay, cool. If you see here, we could have entered here. We could have targeted our risk to reward of 3, but we could have been moved out. You see, crossover downwards, but you see that the price didn't reach on the risk to reward of 3, but at least we could have moved our stop loss to break even, so that we could have not made any loss. Okay. Let's go here. You see here also it managed to close back upward. Okay, risk toolward of 3. Okay, and you see here stop loss here, risk toolward of 3. Okay, here there is some crossover. Okay, cool. As you see here have been happening another crossover here. You enter fall by here after seeing this kind of crossover. Remember, we put stop loss below this where the moving average closed over each other. Remember, the moving average, which is first, must close upward in the black or the slow moving average, so that that's when we have a to enter. Let's try another pair. So that we can see it clearly. This has been CHF-JPY. What is this? This is GBP card. Let us see. Cool. This is a very beautiful clear example here. Happened a very beautiful crossover. Could have entered here. Stop loss below. Okay, stop loss below or here around here. This toolward of 3 could have been made. Okay, remember, the moving average strategy works if and only if you are in a trending market, either in a bullish trending market or a bearish trending market. This structure or this pair is somehow in consolidation. Okay, here we are in consolidation. Let's turn it back here. As you see, we are in a consolidation. Okay, here on this crossover, you see. Okay, we target risk toolward of 3. Okay, because here it has closed fast moving average crossed in slow moving average. Let me zoom and then you see. That's what I mean to say. Okay, here also you see it happened. Risk toolward of 3. Okay, risk toolward of 3. Here it happened. This is GBP card. This is GBP card. Here also it happened. Okay, here also it happened. Risk toolward of 3. Risk toolward of 3, and so and so. Okay, risk toolward of 3. Here also it happened. Remember, it has to be in uptrend market or downtrend market, not in a consolidation. Okay, here it's risk toolward of 2, but it could have stopped out errors and it could have moved our stop loss to break even. Guys, if I say we could have moved our stop loss to break even, that's one of my risk management parameters. I always target risk toolward which is more than 3, 2, more than 2, it's 3 or 4 or 5. If a trade has moved a risk toolward of 1 and then it reaches in 2, I move stop loss to break even. Even if a market can return back to my original entry, I don't lose anything. So it become no profit, no loss. And once it's in a risk toolward of 2, I move stop loss slightly above the break even to secure some small profit, like in 0.5 risk toolward ratio. For example, if I have a risk at $50 and in the risk toolward of 1 is $50, risk toolward of 2 is $100, and once it's in a profit of $100, I move stop loss to $30 profit. Even if a market can retrace back to hit my stop loss, I will secure those $30 to end with my day with some little profit. Remember, if I risk $50, I only target $150 or $200. I don't take $100. That's my principle. That's how I trade, guys. That's what I have been wanting to say. This is a very profitable strategy. Backtest it and try it on your own. Remember to manage risk, but all strategy comes along with psychology. Psychology is the key. That's why I said this channel is about the trading skills. Trading skill is a strategy, psychology, risk management, and the discipline to follow that kind of strategy you are trading with. I will try to give you all possible strategies which I have backtested in my past experience, but you have to have a discipline in order to be profitable with that strategy. Thank you guys. Thank you guys. Thank you very much. Remember to subscribe in order to stay in this destined clan of traders who trade in shadows. Thank you very much. I'm out.